What do pop star Katy Perry and billionaire Warren Buffett have in common? Like many, they're discussing one of the hottest buzzwords of 2017, Bitcoin. After all, since 2013, when good bit data starts, it's up more than 7,000%. We have no opinion of where Bitcoin goes from here. We're not cryptocurrency forecasters. But in our view, Bitcoin is pure speculation and not a good long-term investment. First, the basics. Cryptocurrencies such as Bitcoin aim to be a digital currency. Individual parties can anonymously transfer Bitcoins between electronic storage locations called digital wallets. Bitcoin fans think it and its underlying technology, an accounting platform called blockchain, will revolutionize money by eliminating banks' and governments' involvement. Despite their name, cryptocurrencies aren't really currencies. Hope, hype, and fear drive Bitcoin's price swings, making it unstable and very uncurrency-like. Real money is exchanged for goods and services anywhere. Its value needs to be relatively stable in the short term. Money is liquid, plentiful, stable, and generally accepted, which is the irony of Bitcoin. If it actually became universally used and accepted, few would actually want to invest in it because returns would be cash-like. Put in proper perspective, Bitcoin and other cryptocurrencies act more like speculative commodities. For all the recent headlines, the high speculation doesn't make them wise investments in our view. Bitcoin experiences huge sentiment-driven price swings. Daily swings can be higher than 10%. In just one day in late November, according to Coindesk.com, Bitcoin hit a record high $11,388 a coin and then fell 18.5% to $9,290 a coin, then recovered somewhat to $9,795. How would you have handled that? Much like physical commodities, successful investing requires extraordinary market timing. In our view, buying Bitcoin is a play solely on price movement and others' whims. A Bitcoin doesn't generate earnings, own assets, pay dividends, or provide a valuable service in the economy. Bitcoin also faces regulatory uncertainty globally, with several governments cracking down on trading. In July 2017, the SEC classified initial coin offerings through which companies raise funds by selling new cryptocurrencies as securities offerings, and therefore subject to U.S. federal securities laws. In September 2017, China deemed ICOs illegal and halted cryptocurrency exchange trading. Historically, governments have guarded the right to produce currency, which means cryptocurrency regulations may increase. Speaking of ICOs, always remember that supply and demand drive securities pricing. Bitcoin supply isn't infinite. Once there are 21 million in circulation, that's it. Some cite this scarcity as a reason prices should soar, but Bitcoin isn't the only crypto game in town. According to CoinMarketCap.com, there are 1,371 cryptocurrencies in existence, with a total market cap of over $620 billion. Supply is far greater than most believe, and it's growing rapidly. According to CoinSchedule, there have been 234 initial coin offerings so far in 2017. Check out the upcoming ICO schedule on ICO Alert, and you'll see dozens in the pipeline. This looks like a classic case of euphoria driving supply to market, a classic bubble feature. Finally, anonymity, one of Bitcoin's widely cited benefits, is also one of its largest drawbacks. While blockchain is secure, several Bitcoin exchanges and digital wallets have been hacked. If your Bitcoins are stolen, you have no recourse. Moreover, fraudsters have used Bitcoin's hype and complexity to dupe investors in Ponzi schemes. Ultimately, it's your call if you choose to speculate in Bitcoin. But it's important to have the right expectations and not get carried away. Putting too much into a speculative bet could risk your financial health. That's all for this edition. Thanks for watching.